Well, it has been a wild couple of weeks in the stock market. Many of you may be concerned about your retirement accounts and wondering what happens next. Taking a look at how the market's shaping up today. And you can see the Dow. All right, we're not going to have that full screen, but the Dow is up more than 1,100 points. Now I'm joined by Richard Zak, a certified financial planner at Charles Schwab. Richard, can you hear me?
I can. Thank you.
Hi, Richard. Thank you so much for joining us. Tell us what you see as of today with the stock market.
Yeah, as you pointed out, the market was up about 1,000 points today, clawing back some of the losses from yesterday. We've seen extreme volatility. A lot of this is being caused by the panic and the uncertainty of the coronavirus. We also had some shock to the in our oil segment and between Saudi Arabia and Russia. So no shortage of uncertainty at this point to cause some pretty extreme volatility.
You know, a lot of people concerned, of course, about their 401k. What can you tell people who are concerned? Obviously, there's a little panic right now.
Yeah, no question. You know, first and foremost, do not find yourself in a situation where you're making a move based on emotion, based on panic, based on volatility. Those are never really good outcomes. What you're doing there is you're making a permanent decision which has permanent ramifications. So like the CDC says right now about the coronavirus, don't touch your face. We say don't touch your asset allocation. Make sure it's paired with your goals and your objectives, and make sure you're looking at that to match with your overall risk tolerance. But do not make any wide sweeping changes at this point.
And is that the same advice to those who are getting ready to retire here?
Well, for those that are getting ready to retire, we recommend having a financial plan and having your asset allocation paired to that plan. So if you're going to be using your portfolio in retirement in the short term, then one should be more allocated toward defensive positions, not in the stock market, which as we've seen, could have pretty dire outcomes. So if you're headed toward retirement, that asset allocation is the best advice, and the best thing that you can do is make sure you get that part right.
Now, Richard, there has to be some good news here. This must be also a good time to maybe buy, right?
Well, rebalancing is always a smart idea. So when you start off with that asset allocation that we talked about, when the market volatility presents itself, that is a good opportunity to rebalance back to your targets. Don't make any, again, rash decisions about going too far in or too far out. You want to stay true to that asset allocation and rebalance back. One of the good things that we are seeing, by the way, with the extreme drop in interest rates at this moment, are a lot of people taking advantage of that for things like mortgage refinancing, being able to lock in at lower rates. So there's a little bit of silver lining to this.
All right, we only have a few seconds, Richard, but really quickly, you know, we're seeing the stock market here, you know, plummet. Today was a better day, but the economy will bounce back, right?
Yeah, absolutely. We're talking about companies that continue to grow and make money. As an investor in the S&P 500, yesterday marked the 11th anniversary of the bull market. We're up a 411% total return. The drop in the market over the last couple of days is about 13%, to put that in perspective. So stocks are still a really good way to build wealth if you do it right, and if you get that asset allocation right, paired to your overall risk tolerance.
All right, Richard Zak, thank you again for